How does a country with trillions in foreign exchange reserves from running decades of trade surpluses like China get out of most of its paper holdings in US dollars, euros, and sovereign debt like US Treasuries without most of the mainstream financial press and most of the world noticing? In other words, how does a country like China abandon ship from its trillions in paper reserves without rocking the boat too much and creating panics and manias in every single hard asset and commodity, along with preventing a negative feedback loop that also creates a rush to the exits on paper? China is doing this stealthily, using the ways taught in Sun Tzu's Art of War. Instead of abandoning ship all at once in one fell swoop and panic buying, China's sovereign wealth fund, called the China Investment Corps, and other sovereign wealth vehicles China has set up behind the scenes rotate their commodity sector buying in a contrarian way and focusing on long-term value over short-term market movements. China has already decided to store a lot of its trade surplus in warehoused physical copper instead of paper because the physical gold and silver markets are not large enough to absorb all of China's paper, and it is easier to move money into oil and copper without making much noise. Oil and copper will be used by someone in the future and will never go to zero in value. Paper can. After commodity prices move up quite a bit off lows, purchasing of that commodity takes a break and China rotates purchasing to another commodity where prices have dropped. China has a long history of being accomplished natural resource buyers, since many Chinese have real market experience and used to work on Wall Street prior to working for China's sovereign wealth fund. This is why China is so experienced and disciplined at coming in and doing deals to buy distressed assets during market panics when there was panic and blood on the streets. Who was buying longer-term uranium supply agreements just months after the Fukushima disaster from Cameco and Areva when everyone else was panicking and uranium prices were falling like a rock? That was China. Who was stockpiling oil for its new massive strategic petroleum reserve after Brent and WTI oil prices corrected massively over the last 9 months and buying when no one else on the mainstream said to buy? That was China as well. Who is trying to strengthen their monopoly on the world's rare earth supply after the stock market collapsed in 2008 with acquisition attempts of Linus and other firms? That was China as well. China was in the markets post-Lehman looking for resource bargains with its massive hoard of cash, looking to buy long-term commodity supply agreements for a smart price above low spot prices but way below future market prices. After oil super spiked to $147 a barrel WTI and crashed down below $40 a barrel, it was China locking up long-term oil supply contracts with Brazil and Russia for oil prices way above then current spot prices, but fair enough for Russia and Brazil to still be able to earn a profit on each barrel of oil produced. Many commentators made fun of, heavily criticized, and even scoffed at the Chinese for being so foolish to overpay even slightly above then current spot market prices, but the Chinese, especially in the resource markets, have proven to be advanced, top-level thinkers about higher prices due to supply-demand issues in the future. Besides locking up long-term supply agreements, the Chinese have also in the past tried buying up entire companies, with the most notable acquisition attempt being China's denied multi-billion-dollar bid for Unocal a number of years ago that, besides oil, would have also allowed the company to steal the US's top rare earth deposit, Molycorp's Mountain Pass, for pennies on the dollar of what those assets are worth. Xenophobia and anti-China rhetoric from politicians and bureaucrats, which is still largely prevalent today, prevented China from completing past large resource deals in the US as well as countries like Australia. But this is changing, as China is arguably the world's top creditor, and every developed country, especially the United States, essentially owes China lots of money. In the last few weeks, one of China's large state-run oil companies, China National Offshore Oil Company, or CNOOC, announced a $15 billion all-cash deal to buy Canadian oil sands producer Nexen, with a very large asset base that is diversified not only in Canada but all over the globe. Many talking heads in the mainstream laughed at this deal, saying China overpaid for low-quality assets that China cannot get to make money at a low oil price. But how much lower can oil prices go when unlimited money is going to be printed? The thing I do not see is much lower oil prices, especially when oil is priced in paper fiat money that can be created ad infinitum at the stroke of a keyboard. As the macroeconomic situation rapidly deteriorates and central banks, due to pressure from politicians and large banks, continue to devalue their currencies at faster and faster rates to monetize more sovereign debt or to buy more toxic assets off bank balance sheets, I expect China's sovereign wealth fund and other Chinese companies backed by China's large stockpile of cash and the illusion of good collateral sovereign debt to start doing larger and larger Nexon type deals in oil, uranium, gold, silver, etc. at a faster and faster rate as we approach endgame for this current monetary system sometime in the next few years. Besides the Nexon offer, China has invested over $50 billion in the last 7 years into oil investments globally. I expect those investments to increase at an increasing rate, especially on commodity price weakness, and there is very little that can change this long-term fundamental trend in my opinion. China can get out of its paper holdings faster and easier than many experts realize by buying up entire resource companies on dips or making beneficial win-win investments in joint venture or JV deals like China has done in the Eagle Ford shale patch with Chesapeake Energy and others over the last few years. Expect many more of these deals from China and other foreign creditor countries running trade surpluses who want to dump the US dollar and US Treasuries instead of recycling all of their surplus back into Treasuries like they did in the past. This strategy allows for trade surplus countries to abandon ship without rocking the boat, as large deals are only announced after large declines in commodity prices, and they prevent most of the mainstream from noticing. Eventually, we might see China start doing Nexon-sized or larger deals once a month, every month going forward. Don't be surprised if this happens. Remember, you heard it here first. For more insights on commodities, markets, and the real economy, please check out the main Wall Street for Main Street website at wallstformainst.com. And don't forget to buy the critically acclaimed Petro Profit Report, which can potentially make investors, traders, and speculators profits in the oil markets, whether the oil price goes up, down, or sideways.